you're grappling with something that is imposing a discipline on a world without discipline, because it's like this. So the conviction is driven by this. I would venture to say the only conviction what you should spend all your time on is, can Bitcoin stay decentralized and secure? Because if it can, or if it does, and you're weighting, your probabilistic weighting of whether it does or not, it's actually the only thing that matters in what we just described. There is nothing else that matters. And you could say, I believe governments are going to attack it. I believe quantum is going to break it. I believe, and all of those are beliefs, and you could assign a different probability. But if it stays decentralized and secure, it actually doesn't. It makes no difference. It is repricing the world.
The global financial system is undergoing a fundamental transformation. Decades of credit expansion, government intervention, and inflationary policies have created an economic structure that appears increasingly fragile. Meanwhile, two transformative forces, artificial intelligence and Bitcoin, are challenging the very foundation of how value is stored, transferred, and measured. While AI is driving unprecedented levels of efficiency and automation, Bitcoin is emerging as a decentralized alternative to a monetary system burdened by debt and inflation. Jeff Booth, entrepreneur and macroeconomic analyst, argues that Bitcoin is not just a speculative asset or a digital store of value, it is actively repricing the global economy. Unlike fiat currencies, which depend on perpetual credit expansion and central bank intervention, Bitcoin operates on a fixed supply, energy-backed system immune to manipulation. As Booth explains, the current financial system requires continuous monetary expansion to offset the deflationary impact of technology. AI, in particular, is accelerating productivity and lowering costs across industries, yet these natural deflationary forces are being suppressed by artificial stimulus, money printing, and rising debt levels. This dynamic creates a paradox. While technological progress should lead to lower prices and greater prosperity, the current system instead demands higher inflation to sustain itself. The result is an ongoing struggle between a debt-based monetary system that relies on inflation and an emerging digital economy that thrives on decentralization and deflation. Booth warns that as this conflict intensifies, traditional financial assets may face significant risks, while Bitcoin, as an independent, censorship-resistant monetary network, will continue to gain strength. In this video, we will explore Booth's insights on the intersection of AI, Bitcoin, and the future of financial markets. Please watch, like, and share this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Ultimately, Bitcoin is repricing the world through the free market. It's the first global free market that's ever existed. Like, if you want to talk about prices falling now, or what, really what it's doing is it's lagging it's the canary in the coal mine to a deflationary spiral out of a credit system that would reset everything. And so in that event, Bitcoin would be the only thing remaining of value. And you know that, I know that, because that credit system that we live in cannot be allowed to deflate without a complete collapse, you're going to see a massive liquidity, or as that big print, or
the big print.
Exactly, or anything that we want to talk about it, or Lynn Alden, the Nothing Stops This Train. All of this is the same thing, right? That the existing credit-based system requires manipulation at exponential rates to offset the productivity that should flow to us in the form of lower prices through AI and everything and everything else that we're building. I do think there is a case that some of these agents will use kind of lightning and this is a medium of exchange. But I think the bigger change, the far greater change, is all prices are falling relative to Bitcoin. So essentially the energy-backed system that can't be broken is repricing the world. And most people are pricing that energy-backed system from a piece of paper that's being manipulated. It's interesting to watch people talk about Bitcoin and everything and the existing financial system through a light switch moment rather than what's happening all of the time. We know for sure money is being debased.
Right.
We know for sure you have a decentralized, secure protocol bounded by energy that can't be changed. So both of those things are, depending on your reality, is what you're actually seeing. And so if you've been in Bitcoin for 5 years, you know what's happened over the last 5 years. If you've been in Bitcoin for 10 years, you know what's happened over the last 10 years. If you're in Bitcoin 5 years from now, you know it's going to happen. And it's going to happen at a faster rate until, like, yes, depending on what country you're in, there's going to be some massive dislocations and repricing events that could happen a lot faster. Right, that's just a failure of a currency. I suspect the U.S. currency is not going to fail anytime soon. So it's going, but it might print a lot more, right, and get away with it, and which would lead to a significant rise in, at least in that currency's point of view, to Bitcoin. It fascinates me watching people grapple with the one thing. Like every day there's a new thing that they're saying this is the reason, when fundamentally nothing has changed for the last 15 years. It's you knew one system was insolvent. It couldn't resolve this problem. You knew the system transition was underway. If you're mostly outside the system, if you're in Bitcoin, these dips just provide opportunity to accumulate more. You're grappling with something that is imposing a discipline on a world without discipline, because it's like this. So the conviction is driven by this. I would venture to say the only conviction what you should spend all your time on is, can Bitcoin stay decentralized and secure? Because if it can, or if it does, and you're weighting your probabilistic weighting of whether it does or not, it's actually the only thing that matters in what we just described. There is nothing else that matters. And you could say, I believe governments are going to attack it. I believe quantum is going to break it. I believe, and all of those are beliefs, and you could assign a different probability. But if it stays decentralized and secure, it actually doesn't. It makes no difference. It is repricing the world.
For many investors and analysts, Bitcoin remains a paradox, an asset that defies traditional economic models and challenges deeply ingrained assumptions about money, trust, and decentralization. Jeff Booth acknowledges this skepticism, admitting that even after thousands of hours of research, he wrestled with the same doubts that many still have today. Can Bitcoin truly remain decentralized and secure in a world where power, wealth, and influence have always gravitated toward centralization? Throughout history, every form of money, whether gold, paper currencies, or digital assets, has eventually been controlled by centralized institutions. The natural tendency of human systems is to consolidate power, creating monopolies that dictate economic policy. Given this reality, many question whether Bitcoin can resist the same fate. Will governments intervene? Will large players manipulate the system? Can it truly remain an independent financial network beyond the reach of centralized authorities? Booth argues that these concerns stem from a deeper cognitive dissonance, the struggle to comprehend something entirely new. Bitcoin is the first monetary system that exists outside the traditional frameworks of power and control. It does not rely on trust in a central authority. Instead, it operates on a decentralized network secured by cryptographic principles and proof-of-work energy expenditure. The very thing that makes Bitcoin difficult to understand is what makes it so revolutionary.
This is kind of why it boggles my mind that this is still so misunderstood, because it's the same thing I wrote about 6 years ago. It's exactly the same thing. You would have exponential rate of technology improvement. The natural state of the free market is deflation. So that productivity in a free market, because we only use the things that give us more value. So obviously we're going to use the things that give us more value, and they would be coming at us so fast, which the output of that had to be deflation. In a free market, prices fall to the marginal cost of production. So what's the marginal cost of production of a line of code? I used to say it all the time on your calculator app. 0, because it's a line of code.
Right.
What's the marginal cost of a line of code created by other lines of code? AI. 0. What does that look like as it moves into physical goods, as it moves into robotics, and this AI is actually tackling all the physical goods? Almost 0. Because those companies are going to compete everywhere to be able to put this, and then the cost of all those physical goods is going to follow at the same rate. And so that productivity means faster and faster productivity. And people are measuring that productivity through the system that's stealing the productivity to try to make GDP go up. So it has to concentrate. It has to centralize. So if the natural state of the free market is deflation, if prices fall to the marginal cost of production, if this is true, which we know is for sure true, if you can nod your head, you can do all the research you want on that topic. Unfortunately, what it means is you've never lived in a global free market. All of the things you're pointing at and giving strength through your actions, this person's going to fix it, they're all centralizing functions, and they have to be, because it cannot let that system, that debt-based system, that credit-based system, which we live in and price everything from, it won't let it collapse because you won't let it collapse. So every single conspiracy theory, all of those things are inside that system because they have to be inside that system because you won't let it collapse. Right. And so once you understand that, you stop giving your time to, it's going to be a chaotic journey from one system to another as people have a hard time grappling with what I just described. But you stop giving your time to the system that's stealing your time and energy.
So you're saying the more that you participate in the system, then you're reinforcing that system.
Yeah, everything within it. We know, a whole bunch of your listeners would know, gold gets co-opted. It gets co-opted by derivatives. And if that ever got reset, then it would sink the system. So what they're really saying is because it centralizes, it always gets repriced, and people cheat. People have always cheated on money,
right?
And so it always allows that. You can't audit how much gold China has in the reserves. You can't. If we said we were going to audit Fort Knox, I don't think it'll be a true audit. And then you can't audit what everybody else says. Whereas Bitcoin's blockchain is getting audited every 10 minutes, right? It doesn't care. So this centralized. So what we're saying with some of these assets within the system is it really, and I had to deal with this myself too, the cognitive dissonance I was dealing with it, is if we've never lived in a free market and our actions inside the other system are trying to get rich in a zero-sum game where somebody has to lose because we won, every single asset we're trading within that system is really just a bet on how much is somebody else is going to lose because I'm going to win, all on a centralized system. And there's no way to fix it. That's what really pushed me into exploring, is Bitcoin different first? Could it remain decentralized and secure against that power that you knew would have to try to attack it? And then where do I want to contribute my time? Because the free market isn't a zero-sum game. The free market is a cooperative game where everyone wins. If you and I make a trade, like look at what we're doing right now in this Riverside app, which costs you a fraction of what it would have cost to reach this many users.
Right.
10 years ago, a fraction. And now you talk to this many users and you can build a business by yourself effectively, that by providing value to a whole bunch of people. The output of that exchange is more value for you and me, more value for everybody listening from the output of the exchange that's giving value. And so it's all around us. And that is not so the free market is the only thing we've ever found that allows us to exchange and actually in a cooperative game where everyone wins. But there's always people trying to cheat it.
Jeff Booth's analysis exposes a critical flaw in our current financial system: its inability to coexist with the natural forces of technological progress. For centuries, money has been controlled by centralized authorities, from governments to financial institutions, and manipulated to serve the needs of those in power. As AI accelerates efficiency and productivity, the logical outcome should be falling prices and greater prosperity. Yet, instead of embracing this deflationary reality, our system suppresses it through endless credit expansion, inflationary policies, and monetary intervention. Bitcoin represents a fundamental break from this cycle. Unlike fiat currencies, which require constant manipulation to sustain their value, Bitcoin operates on a fixed supply, decentralized governance, and an immutable ledger. It is not subject to human intervention, cannot be debased, and functions outside the traditional financial system. This independence challenges long-held assumptions about how value is stored and transferred, forcing a reassessment of economic principles that have shaped markets for centuries. Booth raises an essential question. Can Bitcoin resist the natural tendency of all financial systems to centralize? Throughout history, every form of money, gold, government-backed currencies, and even digital assets, has eventually fallen under centralized control. Whether through government intervention, financial derivatives, or institutional dominance, money has always been manipulated to serve the interests of the powerful. Skeptics argue that Bitcoin will face the same fate, whether through regulation, corporate influence, or systemic pressure. However, Bitcoin's design offers a unique defense against these forces. Its decentralized network, cryptographic security, and proof-of-work consensus mechanism ensure that no single entity can alter its monetary policy. Unlike traditional financial assets, which rely on trust in centralized institutions, Bitcoin operates on transparency. Its blockchain is audited every 10 minutes, removing the possibility of hidden manipulation. In a world where financial transparency is increasingly scarce, Bitcoin's resistance to censorship and external control makes it a revolutionary alternative. If you found this discussion insightful, please like, share, and subscribe. Your engagement helps spread awareness of these critical financial shifts and ensures that more people understand the profound implications of Bitcoin and decentralization. Thanks for watching, and we'll see you in the next video.